I'd now like to introduce Vanessa Ogle, who comes to us from the University of California, Berkeley, but prior to that she was at the University of Pennsylvania for a number of years. Prior to that she was a PhD student at Harvard. She's probably best known to many of you for her book, The Global Transformation of Time, a really field-changing book which came out a couple of years ago. And she's now in the midst of a very large project looking at the history of offshore capital, or as she calls it, Archipelago Capitalism, over the length of the 20th century. And she brings to us one segment of this research, funk money, decolonization and the expansion of tax havens, 1950s to 60s.
Thank you, Richard, and thanks also for having me here. And I also want to thank the people at the Tax Justice Network who are kindly recording this talk. I very much appreciate the work that they do. They have a wonderful website with many resources, and if you haven't checked out their website and their resources, and if you're interested in these topics, I very much recommend you take a look because it's really great and helpful. Okay, so as Richard said, what I'll present today is sort of one particular aspect of the broader story that I'm working on. And I want to start by taking you to Bern, Switzerland, to the seat of the Swiss Central Bank, or Swiss National Bank, as it is called, in the 1950s, in around sort of the mid-late 1950s. Throughout the second half of the 1950s, the Directorate of the Swiss National Bank, Swiss Central Bank, frequently discussed the rising number of foreign banks opening in Switzerland. So basically, these central bankers meet regularly and they monitor banking activities in the country, in Switzerland. So at their regular meetings, these Swiss authorities found these bank openings increasingly remarkable. And so when you read the correspondence that they produce, you see them commenting on these developments increasingly. For instance, the Banque de l'Indochine set itself up in Lausanne in 1956. The French-owned part of the Ottoman Bank opened in Geneva in 1957. Another bank, in this case a regional offspring of a French bank, Crédit Foncier d'Algérie et de Tunisie, requested to open in Geneva in 1961. And there were also a number of banks tied to Morocco in particular, opening in 1958, Banque Pariente and Banque Hassan. Such bank openings, as I will explore in the talk today, were part of an expansion of tax havens and tax avoidance in and through Switzerland during these crucial years, while European empires were coming undone at the same time. From the early to mid-1950s, tax avoidance in havens such as Switzerland, Monaco, and Luxembourg, but also the Bahamas and Panama, expanded significantly. In fact, in these years, in the Caribbean from the early 1960s, several new tax havens emerged in places such as the Cayman Islands and the British Virgin Islands. So what I will ask today is what contributed and facilitated this expansion during these particular years, and also the related expansion of professions and services increasingly evolving around the business taking place in havens in this important period in the 1950s and 60s. So the piece that I'm presenting here is in part based off a forthcoming article in the American Historical Review in December. In this piece, I make some related arguments about the relationship between decolonization and tax havens, but the talk today is even more based on another piece that I'm currently finishing and that I will submit to a journal in the next couple of weeks. So I'll be especially grateful if you have any comments that I can include last minute. And this new piece basically brings new and different empirical material to this matter of the relationship between decolonization and tax haven expansion. The talk is, as Richard said, also part of a book that I'm writing on the history of the offshore world, or what I call Archipelago Capitalism. The book is based on research in National Archive, Central Bank archives, private bank archives, the archives of multilateral organizations such as the League of Nations or the Bank of International Settlements, and private personal papers in France, Germany, Switzerland, obviously the UK, the US, Luxembourg, but also places like Guernsey, Island, eventually the Bahamas, Cayman Islands, Singapore, Australia, Canada, and Panama. So for my purposes, this offshore world, or the capitalist archipelago of sort of particularly typologically distinct legal spaces, for my purposes, this offshore world consists of 4 elements: tax havens, what is often referred to as offshore financial centers, even though I don't like this language because it's sort of very sanitized, and it is in fact the language that the tax avoidance industry invents to talk politely about these things in the 1950s and 60s. But you'll see what I mean by that. There are also importantly flags of convenience registries and sort of related, but not really what I'm primarily interested in, are so-called foreign trade zones or later export processing zones. So while today I'll focus on the 1950s and 60s in this project overall, in the book I'm writing, I'm in fact adopting a time frame that sort of spans roughly from the 1920s and 30s to the 1970s and 80s. And in fact, it is important to me to make the case for basically crossing the 1945 threshold and conceiving of these years and decades, as I like to call it, as sort of the long mid-century exception. In the 1920s and 30s, beginning in these decades, certain Swiss cantons, as well as Liechtenstein, Luxembourg, and the Channel Islands and the Bahamas became tax havens for the first time in a sort of more modern sense. Also in the 1920s, ships owned in the US and elsewhere punctually began to register under the Panamanian flag of convenience to avoid higher wages, crew and safety regulations, and taxes at home. After 1945, tax havens and flags of convenience expanded considerably, and they were now joined by offshore financial markets, in many cases operating out of tax havens such as Luxembourg, the Bahamas, and Panama, and later Singapore. This was the so-called Eurodollar or Eurobond market, not to be confused with the euro today. Eurodollars described to sort of simplify it a little bit, dollars handled outside the United States, and that meant outside the jurisdiction of the Federal Reserve. These markets were, in contemporary parlance, often referred to as extraterritorial or stateless markets. Beginning in the 1970s, all of these elements of the capitalist archipelago expanded dramatically in scale and scope, not least due to the end of the Bretton Woods system and the end of exchange controls and other regulations. And what is more, from the 1970s and 80s on, certain elements of this archipelago moved from onshore to, from offshore to onshore in Europe and North America to be greatly expanded there, with the rise of finance and deregulation, or with the rise of what is often referred to sort of rather clumsily perhaps as neoliberalism. I argue that what happened in the 1970s was a dramatic expansion of something that had in fact started in the 1920s and 30s, an expansion that importantly entailed now a move from sites that were often located in the non-Western world to onshore in the North Atlantic world. And in certain ways, the non-Western world almost served as a laboratory of sorts for certain aspects of deregulation and financialization. And then, as I said, some of these things were adopted and implemented in countries like the United States and the UK, and later other parts of the North Atlantic world following the 1970s and 80s. And so it's really sort of the connection between offshore and empire and decolonization, and at the same time, the connection or the relationship between capitalism and the state that I'm primarily interested in with this project. The stakes involved here are sort of in part historiographic, but they're in fact also political, if you want. And according to the most widely followed estimates today, $7.6 trillion are currently stashed away in tax havens, which is roughly 8% of total global financial wealth. And if you want to put it in perspective, it is more than what the poorer half of the world's population owns in total. Whereas another example for why this matters, roughly 40% of the world's hedge funds are registered in the Cayman Islands today. More than half of the world's ships are registered under flags of convenience. And if we believe the arguments of economists such as Thomas Piketty, tax havens in particular have contributed significantly to the rise of inequality within Europe and the United States. Offshore is an integral part of the world economy today, but we know, in fact, not all that much about its history. So historiographically, if you want more so from the perspective of an academic speaking and a historian speaking, what I want to do with this project is to reopen the history of these decades from the 1920s to the 1980s, so again, the long mid-century, if you want, and to sort of look at this period as one in which the state and a particular kind of state, a particular kind of nation state, were dominant in various ways. The New Deal, the European welfare state, European decolonisation, economic planning, Keynesianism, Bretton Woods system, can all in one way or another be conceived of as state and government-driven and based projects. So I'm interested to ask under what conditions these projects existed and how to make sense of the simultaneous emergence of this other, if you want, international political economy of offshore. And one of my conclusions so far is that the capitalist archipelago was by no means an aberration from this liberal democratic capitalist order of the long mid-century, but rather it was an integral part of it. And as I argue in the forthcoming piece in the AHR, this legal order of offshore was an outgrow of embedded liberalism and therefore of a particular kind of state that was important and sort of a project that was pursued during these mid-century decades. It was also encouraged and supported by governments. That's another argument I make. So today I will focus mainly on tax havens and on the question why they expanded significantly during the 1950s and 60s. The amount of tax avoided through havens would eventually be much higher from the 1970s on, with the end of the Bretton Woods system and the end of exchange controls. But these earlier decades were important because the networks and infrastructures necessary to systematize tax avoidance were put in place during this time. The armies of lawyers, accountants, and bankers who were and are instrumental to avoidance honed their networks and services in these particular decades. And as I want to show today, they perfected also bureaucracies of avoidance, which, as I want to show, could rely on much older ties within the worlds of empire. This is a map of tax havens from the internet. Eventually, I think I will have to somehow try and make one myself because it's actually not a very good one. It does show you that they come in sort of many, they appear in many places, and if you're interested in that, I can talk more about the sort of division of labor a little bit sort of amongst these different havens, whom they cater to primarily, and so on. But I'll do that in the question Q&A if you want to hear about that. The reason why some of these maps that you find on the internet are problematic is that definitions change and countries sort of drop on and off the list of tax havens, so that complicates things a little bit. But tax havens are commonly understood to be places or countries autonomous enough to write legislation that allows persons and corporations to avoid the higher taxes and regulations that would apply elsewhere. Registration and incorporation in these sites are normally made very easy. Tax havens are also characterized by a culture of secrecy and anonymity for wealth and profits. What I want to show is that this expansion of tax havens in the 1950s and 60s grew out of a very particular constellation in European and global history. It was a confluence of sorts of decolonization, the post-war movement, and the European welfare state. And in turn, the expansions of tax havens growing out of this constellation subsequently obviously had profound and much longer-lasting impact on economic, social, and political developments around the globe. There are certainly general factors that explain the proliferation of the capitalist archipelago and tax havens in these post-war decades. The Bretton Woods system, how it restricted certain capital movements, high tax rates as part of the welfare states, among others. But I believe that for tax havens, it's actually possible to point to much more specific factors that propelled this expansion. So I want to return to my story from the beginning to the Swiss central bankers who are gathering at their weekly meetings or bi-weekly meetings and reflecting on the opening of banks in Switzerland. When they gathered in the late 1950s and discussed the opening of these foreign banks, they were certain they had identified some fairly specific reasons behind these developments. When they began to search for explanations, it was the opening of two banks in particular, the ones that I mentioned last, Banque Pariente and Banque Hassan, that ultimately provided Swiss central bankers with clues as to what was happening and why all these banks were opening. These two banks were Moroccan banks, but in fact they were not just Moroccan banks, but they were banks based out of Tangier. So when Swiss central bankers in this moment look to Tangier, I'm going to just take the slide away. When they looked to Tangier in the mid to late 1950s, they found an explanation for all these foreign banks for a certain kind of bank, basically mushrooming in Switzerland, not just the Moroccan ones. Tangier had held a particular status over the past decade, so there's a background story to that, which they then found out about. When French and Spanish imperial interests in the Mediterranean clashed around 1912 over the establishment of European colonial rule in North Africa, and in Morocco in particular, the two countries could not agree who would obtain Tangier. And as a number of such examples in the 19th and especially in the 20th century, you could think, for instance, of Shanghai, Gdansk, Berlin, and Trieste, Tangier was placed under the international control of a multi-power consortium. As a consequence of that, in the interwar period, Tangier became a bustling center of trade, smuggling, and tourism. Tangier's state of affairs as an internationalized zone continued throughout the late 1940s and 50s, and it was during these years that the city became known as, quote, the haven of four freedoms, as the Wall Street Journal wrote in 1956. Quote, freedom from taxes, freedom to exchange the world's currencies, freedom from customs duties on goods in transit, and freedom to incorporate and operate in secrecy. So you will easily understand these were sort of quite different four freedoms than the four freedoms we normally know about. And the New York Times commented, quote, the division of authority and responsibility has left Tangier one of the few remaining citadels of financial laissez-faire in a world of controlled currencies, planned economies, and socialized taxation, unquote. It's always interesting to me to see how conservative the New York Times was not so far ago, or rather sort of how conservative a certain brand of American liberalism was. Roughly 145 banks were said to be operating in the small zone of Tangier in the mid-1950s. Finally, there were also roughly 6,000 so-called Tangier corporations, about half of which were estimated to be active. These corporations, as the New York Times explained in 1951, quote, have been set up usually for tax evasion purposes to effect unauthorized capital transfers and to camouflage the true ownership of gold, securities, real estate, and other assets held here, unquote. And in fact, the story of Tangier as, if you want, sort of the first haven, were with the help of French banks and certain types of sort of wealth managers as a profession, and also with these Tangier corporations. So with these developments basically prefiguring many things that would later reappear in other sites of the offshore world, is actually something I think needs to be written about and explored more. It's an extremely interesting story, but there's basically very little work done on this. By the time that Swiss central bankers were seeking an explanation for why all these banks were opening in Switzerland in the mid to late 1950s, something had changed. Quote, planes are rushing out the last few tons of the free zone's gold, it was reported in 1956. Contents of secret numbered bank accounts are being transferred to another anonymity in Switzerland. Banks and trading companies are getting set for quick moves to new bases of operation in Latin America, Monte Carlo, Beirut, another article read. Tangier's fortunes as the haven of four freedoms were obviously fading. And of course, as you will have gleaned by now, the explanation that Swiss bankers found eventually was that Morocco had become independent from French and Spanish colonial rule in 1956, and soon thereafter, Tangier was incorporated sort of into the new and newly independent Moroccan nation state. In consequence, the capital that had sought refuge in Tangier was now moved to other places. So if we take a look around the French Empire, formal and informal, roughly during the decades from the 1950s and 1960s, Morocco was, of course, not the only place to become independent. It had started with the independence of the French-Syrian Mandate in the Levant immediately after the war. Indochina, gradually leading up to 1954, followed. Tunisia, 1955-6, Morocco, 1956, Algeria, eventually in 1962. And interestingly, as Swiss central bankers were increasingly aware, Tangier had, in the process of decolonization, become a temporary haven for money that was leaving other colonies, due to its tradition as such a place during the interwar years. So that when Tangier was eventually incorporated into the new Moroccan state, this had particular impact on banks opening in Switzerland, because the banks that had previously sort of left other places and then set up shop in Tangier were now trying to move again to other places. Banks establishing themselves in Switzerland in these years were in fact fairly open about the nature of their business and confirmed the suspicions or these ideas that Swiss central bankers had. One of these banks stated as to why it wanted to operate in Switzerland, quote, it seems that not being represented in Switzerland risks sending numerous clients in North Africa and the Middle East into the arms of foreign banks that have established themselves in Switzerland to take care of this clientele. So who were or what was this clientele? For the relationship between decolonization and tax avoidance, especially through Switzerland, it was important that if you want the first wave of decolonization in the 20th century, of French decolonization in the 20th century after World War II, occurred in places with, relatively speaking, significant European settlement presence and investment, which created a clientele eager to get themselves and their assets out of these places, out of these newly independent countries. And I'm only sort of beginning to assess the scale of this there too, sort of more work is necessary, but a few numbers should help give you a general sense of what we're talking about here. And there's a caveat, because the numbers that I will give you are old French franc, and there was a currency reform at some point in the 1950s. So it sounds sort of more than it would eventually be, but it's still significant. In 1956, 35 billion francs were said to have left Tunisia. Tangier's gold reserves shrunk from roughly 50 tons in the early 1950s to a mere 6 tons in 1956. Algeria lost 40 billion outflow of capital in 1959. In 1960, a total of 473 million francs arrived in Switzerland as registered by Swiss bankers, and from January to February 1961 alone, another 200 million found their way into Swiss banks. Most of these figures, of course, represent merely an outflow of capital from the colonial world, and that does not necessarily mean that capital is flowing into tax havens, whether it's Switzerland or other places, but at least I think it serves to illustrate the great potential for avoidance that was here. This development was not limited to French colonies. A similar process, unsurprisingly, was unfolding in the British Empire. Here, too, the end of empire unsettled European and other populations and investments. Two budding tax havens under British control began, in fact, to specialize in attracting not just returnees from empire, who were dislodged by changing political fortunes, but also retirees, people who had worked and lived overseas in the colonies and now wanted to enjoy their retirement savings. So banks operating in the Channel Islands, for instance, in the early 1960s began to recruit the money of these retirees from empire. Hill Samuel, a well-regarded British merchant bank in particular, was sort of first and foremost among them. Malta, which became a tax haven through the adoption of a number of laws beginning in 1959, while still formerly under British control, specialized in drawing in not just the funds of retirees, but pensioners themselves by offering tax reliefs to people who were newly settling in Malta. Another very well-known British merchant bank in 1963, around the time of Kenyan independence, was actively designing schemes to help people resident in Kenya to move their assets to the Bahamas, where the same bank was involved with one of the earliest trust companies beginning in 1958. In a memorandum dated June 1st, 1962, the bank writes about having conversations with Kenyans and recruiting them as clients. Quote, so they were talking to, quote, two wealthy residents who, because of their local commitments, are compelled to reside in Kenya for a further 3 years, despite the political uncertainties. They have large farming lands there, and in addition, they have considerable funds outside Kenya, mainly securities. The income on such securities has meanwhile been retained in the United Kingdom. Of course, there were currency controls operating there. In both cases, these individuals worried about the future of their assets, and in both cases, quote, we, the bank, recommended a Bahamian discretionary trust, unquote. As the memorandum went on, as a result of political developments in the above-mentioned countries and possibly others, it is suggested that the bank should give consideration to sending a knowledgeable representative to such areas with a view to getting business in the trust field, as there seems to be an obvious need for residents in such areas to take some sort of evasive action against future legislation in their countries of residence in order to preserve their foreign assets. And in fact, if you allow me a brief parenthesis here, the same merchant bank that was starting to cater to residents in Kenya also targeted Indians who had become wealthy in different or the same parts of East Africa, and who now, with a so-called Africanization and other things going on, stood to worry about their assets as well. And this, in fact, points to a larger aspect of this story. Two of the Moroccan banks that I mentioned as setting up branches in Switzerland were, in fact, run by Sephardic Jews. So this is basically to say that another group interested in moving assets in this period were members of, if you want, sort of traditional trading diasporas, such as South Asian merchants in East Asia. Maybe Andrew knows something about the Lebanese in West Africa in this context. Or, as you can imagine, sort of members of religious communities, for instance, in the Levant, who had often served as sort of go-betweens between native populations and colonizers or informal imperial powers in the region, and who now also may have had an interest in leaving the colonial world, or at least getting their money somewhere else. So, as I said, this is sort of something I've come across and I'm writing a longer piece about, but it is also something that is not sort of directly related to my offshore project. So I've put up here on the slide different instances where, in fact, money flows from the colonial world to other parts of the colonial world, or from a place like the UK to a place like South Africa and Australia. And this is also where I can briefly sort of explain the title of the presentation. So when this happened, when funds sort of left the UK and moved to South Africa and Australia, but also when sort of money, left Shanghai to go to Hong Kong and so on, when these kinds of movements of assets happened, sources, not always, but very often talk about funk money. So this is actually a term from the sources. So with regard to these instances, and generally this argument, there are sort of a number of caveats. First of all, not all of the money that, for instance, from the Middle East was moving to Swiss bank accounts wasn't necessarily the money of Europeans. You can easily imagine colonial elites who may have had a similar interest in this. You can easily imagine, particularly in the Middle East, oil money sort of beginning to play a role. Some of these funds may have also been simply assets that Europeans had held since the late 19th century in securities form when they, invested abroad, which had become, not super common, but fairly common in the final decades, or since the final decades of the 19th century. Okay, let me just. So some of the prominent instances that stand out, and sort of an additional caveat, the fact that former colonies became independent was definitely one sort of driving moment, but another important factor was currency devaluations in Europe in the immediate post-war period, and the fact that people were worried about this, and perhaps sort of more difficult to grasp for us today. In the 1950s, for instance, many Europeans were seriously worried about sort of a global spread of communism, sort of influenced by the Korean War, so that sort of created almost a kind of panic situations where people were interested in moving assets. So decolonization is not always the prime factor in this, but I'm fairly convinced that it is one a part of this story. So in 1948, we see funds from the UK move to South Africa and Australia, where in both places there are mining booms and there's a lot of investment opportunity. And this is in particular inspired by currency devaluations. There has to be, and this is not something I'm sort of researching, but I'm sort of finding, bits and pieces of information in newspaper articles. There has to be a similar thing going on when Shanghai closes down, and generally sort of when the Chinese communists take over between Shanghai and Hong Kong. And interestingly, one case I've come across concerns the famous Sassoon family. So the Iraqi Jewish Sassoon family living and sort of in the role of its most prominent member in the early 20th century, making a lot of money in British India in the sort of beginning of the 20th century during World War I, and then in the interwar period. And once income taxes and other taxes are sort of beginning to be raised a little bit in the interwar period in the 1920s in British India, Sassoon leaves British India and he moves to Shanghai. And he basically sets up shop there, invests in real estate in particular, and eventually in 1948 he leaves Shanghai and he moves to the Bahamas, where I'm not entirely sure if it's sort of the main Sassoon guy or if it's maybe a son or another relative, but sort of one of the earliest banks in the Bahamas operating trusts and other sort of avoidance vehicles is sort of set up by the Sassoons with this kind of money. There's the 1950s sort of Indochina to North Africa. So interestingly, in the 1950s, apparently people were convinced that North Africa would always be French. And so what happens initially is that money from Indochina moves to North Africa in the assumption that that will be sort of a stable and ongoing French place. But then when Morocco in particular becomes independent, that ends, and so from then on, from 1956 on, you get Morocco to Switzerland, Tangier to Switzerland, North Africa, Tangier to Monaco. So the flourishing of Monaco as a tax haven begins really with sort of French decolonization. You also get movements from Egypt to Switzerland. You get sort of a little bit of movement from Lebanon to Switzerland when there's sort of a mini civil war in 1956-58. 1959, Cuba to the Bahamas. 1960, Belgian Congo to Switzerland and also to Monaco. And I'm also strongly suspecting that there's a movement out of South Africa when racial tensions really for the first time become very much to the fore in the early 1960s. And I have in fact found one instance of people moving money from South Africa to the Bahamas. So this is just an idea, just basically to give you an idea of what this kind of funk money movement looks like, or could look like. And it's interesting to note that at the time, observers in fact knew that this was happening. Reporting on the Bahamas as a booming tax haven in the early 1960s, the Washington Post remarked, "When Britain's numerous African colonies folded, much uninvested or liquidated capital was sent quietly into Nassau's banks." Or take the French Le Monde from 1962. It has been 10 years now that with the loss of colonial territories and the monetary tightening in the West, capital has in waves flown into Monaco. There was the Indochina wave, the wave of the old African colonies, the wave of the Congo, some others, and others perhaps to follow, unquote. And it seems to me that historians have not really reflected to this as an aspect of the history of decolonization. And I think it is important. In concluding later, I will tell you why. Some of these connections, of course, you can very easily imagine to be old and established. And these movements of money and sometimes people could draw on previously existing circuits of money and people within empires. As I'm sort of beginning to find out, apparently it had been common for members of the Indian civil service, for instance, to retire in Malta already in the late 19th century. And Tangier was in fact also known as a place of retirement for officials who had served in the military and navy, in particular overseas. Sending money within the empire, when you think about remittances, for instance, must have also been an activity that should have been able to rely on older 19th century connections. My hunch is also that, especially within the British Empire, there was actually considerable migration of white British citizens. Places such as Australia, South Africa, but also Rhodesia and Kenya, from what I can tell, or I'm sort of beginning to tell, must have been hubs in these kinds of circuits. But I think it's, again, sort of necessary to look at these things more closely than has been done necessarily. To illustrate some of these older genealogies of empire, which also extended into the, if you want, the kind of typology of sites that made up the capitalist archipelago, I want to quote an observation by an American reflecting on what was going on in Tangier in 1957 when it was incorporated into Morocco. So he writes about a particular place, one that, as he puts it, quote, was carved out of a larger entity which continued in existence. And he says basically about these kind of places, they were, quote, known throughout history. It took on special importance with the rise of European seafaring after the discovery of the Americas and reached its apogee at the end of the 19th century with the treaty port system in China. By 1900, a collection of special zones, international settlements, leasehold ports, and fortified islands garlanded the major trade routes of the world like a brilliant colonial necklace. From Panama to Suez, passing by Guantanamo and Gibraltar and continuing on to Aden, Zanzibar, Goa, Pondicherry, Singapore, Macau, Hong Kong, Shanghai, Tsingtao, Weihai, the Liaodong Peninsula, and Port MacArthur, to name only the important. I think brilliant colonial necklace is an expression I like a lot. It's helpful to remind us that these returnees from empire, when considering where to basically take their assets, in the metropole faced some very high income and corporate taxes and even taxes on income derived from capital. But when I began to discover these connections, I also wondered whether there was not perhaps an additional explanation that could be found more in the colonies themselves, in the previous sort of world of colonies and empire. So I began to read a little bit about taxation and colonial context, and what became pretty clear is that for most Europeans, not native populations, but Europeans and other, let's say, sort of white people living in the colonies who could claim to have a foot in these territories, being a resident in certain parts of the British Empire in particular, but the same goes apparently for the French Empire, had been a way to significantly reduce their tax liabilities. For the French Empire, I'm relying mostly on work in progress that a graduate student at Columbia, Madeleine Walker, is doing. And from her work, I know that French colonial taxation was extremely uneven. It varied significantly from place to place, and even within colonies, certain taxes applied in certain regions, but not in others. And then, of course, there was always the problem of enforcement in the colonies and the actual difficulty of collecting tax. Most revenue came from tariffs and various direct non-progressive taxes levied on native populations. Europeans enjoyed wide-ranging exemptions. In fact, progressive income taxes were, both in the French and British Empire, really only a product of the late 1930s, and even more so the 1940s and 50s. And even when these taxes were introduced, they were low compared to metropolitan tax rates. Whereas in the metropole, as you will know, the First World War had generally brought the adoption of income taxes, which were then further expanded and raised again during and after World War II. Let me see how I'm doing on time here. Okay. So to summarize what I've argued so far and to reflect on what that means for how historians think about decolonization, independence from European colonial rule created a clientele afraid of leaving assets under the control of newly independent states, fearing nationalization, both on the corporate and on the individual level. And also, of course, fearing all kinds of other consequences for them as members of the former colonizing state and power. Faced with high redistributive taxes and welfare states at home, Europeans, if they could, decided not to perhaps repatriate all assets if such options existed. And of course, here it is necessary to point out that those who were able to get their assets out in time and to even use sophisticated strategies for shifting money to Switzerland or the Caribbean, they were very likely more affluent people. In fact, we know that poorer residents of the colonies often got caught up in the process of independence and found themselves stranded as so-called refugees. It was actually a term used to people being driven out of Egypt in 1956-57, back in the UK or France, where they found themselves with very little that they had been able to take with them. So this applies to a certain kind of person previously resident or active in some commercial and economic capacity in the colonial world. An additional incentive for such moves was that empire had previously provided a structure the unevenness of which allowed individuals and corporations to lower their tax liabilities considerably. Unevenness of political control, degrees of political control, sovereignty, unevenness also of tax collectability, but also unevenness of tax jurisdictions as such, unevenness of tax rates, unevenness of tax types, even sort of a pretty striking sort of heterogeneity of accounting standards of how an income was assessed for taxation, differing from colony to colony sometimes. In some ways, the emergence of tax havens, offshore finance, and flags of convenience registries in the 20th century recreated some of that imperial unevenness, but it did so now for an age in which more sizable and mostly more homogeneous nation states had become a model, at least sort of a model that was aspired to, for organizing power and territory during the long mid-century. So this is an argument that I make in the forthcoming piece in the AHR. So in briefly concluding, I want to ask what the stakes involved here are and what the broader significance of all this is. In the process of decolonization, assets were not just transferred, but when you think about it, they were also transformed. So what does that mean? So to illustrate this, you can basically recall what the process of asset relocation practically involved. When Europeans left Morocco, Tunisia, Algeria, Kenya, and so on, in many instances, they will have sold a farm, or at least tried to, if they sort of got in the game early enough. They sold a warehouse. Maybe they sold machinery They sold remainders of whatever they had been trading in. They sold their land, they sold their property, real estate, and so on. What they took with them was cash, sometimes gold. European decolonization was not just a relocation of assets, which I think historians should take more seriously, but it was a liquidation of assets. But this was not the end of the story. When these funds arrived in tax havens, in Switzerland, in the Bahamas, and so on, they did not sit idle in a bank account. The Swiss central bank, the people sort of regularly holding meetings, in many cases described how these newly opened foreign banks basically invested these funds everywhere in the world in securities, mostly in the United States and Canada in the early period, or alternatively in a growing range of mutual funds that were popping up, especially in the 1960s, which were increasingly located in offshore destinations such as Panama or the Bahamas, for instance. So this is to say that decolonization was therefore not only a process of European and other geopolitical and territorial reorganization with lasting impact on societies, but it was also, through the removal of assets from the colonial world, tied to one of the most important, if you want, sort of global structural economic transformations of the 20th century. That's what I argue, in ways that I think historians haven't considered. Financialization, as you may know, is a term commonly used to describe the growing share of financial services and the rise of portfolio investment as shares in GDP, as opposed to trade and manufacturing, and also as opposed to investment, to what is called direct foreign investment, which means basically investment in actual sort of brick and mortar assets. And this occurred roughly sort of from the 1970s and 80s on, especially in the North Atlantic world. Decolonization provided an important impulse for that development. Historians have made much recently, and rightly so, about the impact that decolonization had on societies at home in Europe through migration in particular. For instance, when you think about the work of Todd Shepard and Jordana Balkan, the question of what happened to European assets when Europeans and others left the colonial world is largely understudied, but I think it is an important one that historians, in my view, should take up. Decolonization was an economic and financial event of the first order. And with that.